All right, so for recording purposes, just to catch people up on this, we're talking about what happened today. So what we're looking at is the futures ES on the daily, right? Obviously, I know a lot of you look at futures on the smaller time frame, but to me, I feel like the day kind of gives the clearest picture, in my opinion, right? So I did a bar replay, just rewinded. Right now, we're talking about external range liquidity or highs and lows, if you will. And whenever the price goes above a previous high or goes below a previous low, you have potential for exhaustion risk and therefore reversal. It is the same concept, just different terminology that's used between both strategies, but both of them agree on the same thing, right? When those lower lows are made, there is a chance for exhaustion and therefore reversal back to the other side to expand and make higher highs, right? So right now, price after making a high has come back in. So again, these anybody getting in or anybody that's going long after this low is broken down here, anybody that's going long is most likely targeting up here or one of these targets as a take profit. So let's continue on and see what happens, right? Just I'm going to fast forward a little bit here, right? So now when we finally we break that high, right? And then what happens? After that high gets broken, you notice first time rejected, right? Can't really stay above it. Same thing again here. Tried another push, but couldn't really get that institutional sponsorship or really couldn't get that volume, if you will, right? Above. And then we end up getting a 3, right? Tried again one more time, broke the highs. So just so you see, we have 2 more highs that were made, right, over this. So we can move this over here, right? And what do we notice? Since making that higher high from here, right, we could not displace back above that buy stop. Again, making that higher high, buy stops there, right? So we know that we have a bunch of highs clustered together. We know that there's generally some pretty good resistance here, right? Because if you notice, this candle completely displaced back below almost all of the previous highs, save this one, okay? But once price crossed above this high, now you're at a potential, now you're potentially at risk for exhaustion and therefore a reversal, especially when you are at all-time highs. Does that make sense? If you don't understand it, please let me know. All right, cool. So there's no questions. So what will happen is, again, using ICT terminology, we have price that is now traded to external range liquidity. Liquidity was swept, came back into the range. So what we're looking for is for it to trade back into internal range liquidity, aka a fair value gap, right? So far, what we have seen is this previous fair value gap. It traded down. It's going to be small, but let me see if I can stretch it. Right. So we got price trading back into possibly touching this fair value gap, but right now it's currently inside of this one. Actually, a gap fill. So one or two things will happen. Either A, we start, coming back through the gap, or what I've seen happen is that we come back to test the 50% of the gap on a smaller time frame. Probably is going to be a fair value gap somewhere there. Trade back into that fair value gap, and then we continue down. As a matter of fact, let me look at that real quick. So we have a bearish breaker block up here as well too. Yes, I'm cheating because I'm still learning how to identify them, but we have a bearish 4-hour breaker block up here. So potentially, and then we also have a previous low that could act as resistance. So potentially we could trade back up into this range, 5306, before ultimately coming back down if we're gonna, continue to come back down. And again, like I said, probably trade back into the next fair value gap. As ICT said, price sometimes can have a tendency to skip over one fair value gap in order to move down to the other one. but there's definitely some room to drop, as you can see. But all that happened today, even looking at on a smaller time frame, you got the power of three. You just guessed wrong, right? You get your accumulation here, right? The manipulation is when we take out this high above, we make a higher high. There's your manipulation, and now distribution straight through, right? Took out the lows to the other side as well too. So, can continue, like I said, continue pushing down. If it does, I would probably say use this low. Oh, well, that's the 270, my bad. On the daily, I'll probably say use this low down here, 52.15 um, as the next target, right? For it to drop down to. And again, this is nothing bad. This is honestly, this would just be a healthy pullback, just like what you saw over here, right? It made all-time highs and then it pulled back. And then what did it do after that? Made all-time highs. So, it could I would probably see it if it does like really, really fall. Over the next couple of weeks, I can probably see it falling down maybe to touch this fair value gap and then finally bouncing because it would still technically be making higher lows anyway, right? So that's what happened today. All that happened today, really simple, is a high was taken out, there was exhaustion and reversal. Buy stops above the highs, profit was taken, and yeah, that opens up to selling pressure. And look at what happened. So, and probably during this move when this high was taken, this is when a lot of people probably got trapped as well too. Strat wise, right? Probably I'm not trying to knock strat, but strat wise would have told you to take this trigger, right? When it goes three and then triggers to the upside, you could have taken that trigger to the upside, even though technically that's not a strat combo. But you would have at the time it would have been even though bearish, it would have been a outside hammer, 3-2 up, right, at the time, until it starts coming back into the range. So a lot of bulls and a lot of people who wanted to go long probably got trapped here. Now, once this stop loss gets broken, probably forces and triggers those longs to sell, and that probably added to that selling pressure as well too, if that makes sense, right? So um, that is that, right? I mean, if there's no questions about that, I'll move on to the next thing. But that's that, And when this stuff like that happens, right, and you're taking the temperature of the market, this is why I pay attention to futures to gauge the temperature of the market because I was looking at it on the 65, and yeah, I'm seeing, even on the 65, what do? We took out a high, so again, we have exhaustion, right? Every time a high gets made, like you get some sort of a pullback, right? High here, you get a pullback there, same thing, right? So now that we have, we made that higher high, yeah, buy stops above, take profit, and yeah, that sets you up for the reversal back to the downside. And what a beautiful move it was. As a matter of fact, I bet you the Bears are probably licking their fucking chops at this point. Really, like seriously, when it right here, that they were probably licking their chops at that point, ready to just pounce at that point, right? And again, it's a trade-off. They get their time, they get to sell off down to a low, and then again, that's going to leave an opportunity for a reversal back to the upside. But you have to start training your eyes to see this. What I've noticed, and I'm saying this more for the recording sake because I really don't know who's on the call. I'm just staring at my screen. But for recording sake, you have to train your eyes to see things both ways. It cannot just be focusing on going long. It cannot just be focusing on calls. I'm speaking from experience. There was a point in time where I could only trade calls because I did not look for puts. And I guarantee you, the more time and effort you put into this and the more of an understanding that you have with the market, I gotta say, you probably end up loving puts more. Real shit. It's like, you're not really preying on the downfall of the market, but look at this shit, right? Look at this shit. Like, so let's say like price dropped all the way down to here, right? So it took, say, from here, from May 24th up to, what's that? I'm sorry, I said the wrong thing, my bad. It took until Wednesday, 8:05, almost 2 weeks later, Thursday. Actually, no, a little bit. I think no, a week later, my bad. Thursday, right, to get up here. And in pretty much a day, we're right back to where we started, all the way back. It's fucking elevator. Quick, fast, in a hurry, money. Quick, fast, and in a hurry. All right. So, for those of you that love, like, quick movement, speed, things that move with volatility, you should fucking love puts. Honestly, it's the calls that take the stairs up. I'm not knocking calls, of course, but as far as speed, yeah, them puts pay quickly. Not to toot his horn, but that AMD call out, yeah, man, like you could have got that shit from 171 all the way down to where it is now. You would have made a bag and a half. All right. Okay. So that's all that happened. Now, for my beginners, to continue our conversation, I think we were talking about what was seen with CCL, right, on the weekly specifically. All right. So, really simple, strat wise, right? Not necessarily a shooter because the body's a little bit bigger, but I'm still seeing the exhaustion, right? What do? We took out a high, even though it's not like all-time highs or, a cleaner high like this, a swing high like this, it's still a high, right? So we took that out, we expanded the range, and therefore we have potential for exhaustion and potential for reversal back to the downside, right? So seeing that, also ICT wise, what do? We traded back into a fair value gap. Remember, price is either moving towards internal range liquidity or external range liquidity. In this case, it moved back to internal range liquidity, right? It came from external, right? And then came right back into the fair value gap. That's your internal range liquidity. And now it's bouncing off of it, or it seems to be bouncing off of it, displacing away from it. So instead of traveling to the other end of the external range liquidity, it bounced off of that. So now it's more than likely heading back down for these targets down here at 1398 or 1380 on the weekly. All right. So when I see that on the weekly, right? I'm sorry, hold up 1 second, my bad. All right, so I have those lows as my target. Now, on the daily, after I see, so the weekly, obviously you're not just going to use one time frame, but seeing that, right, especially if you trade fair value gaps on ICT, that's like, this is the type of shit you should be looking for when price trades back into, right? So we're clearly in a downtrend, right? We haven't broken structure by taking out this high just yet, right? So actually neither this high either, right? So we haven't broken structure. Structure is still to the downside. Price, what did price do? Traded into a fair value gap, rejected, and now coming back out, right? So that should definitely pique your interest from an ICT standpoint when if you trade fair value gaps and when you're ready to, excuse me, if you're looking to get into puts, right? Same thing for calls, but just in reverse, obviously, as well too, right? Like price would go up and then then retrace back into a fair value gap before going higher. TTO, if you will, right? And that's essentially what we're looking to do here as well too. We're looking at TTO, but back to the downside. Not trying to be funny, but my switching between the strat and the ICT terminology. Am I losing anybody? I just want to make sure. Somebody give me a no. If you like, somebody just answer me if you follow what I'm talking about. shit, my bad. All right, cool. Uh, what did I do to do that again? Nope. There we go. Jesus. All right. Following, doing great. All right, cool. I really wish we had more of the. I'm not. It's not a complaint. I just really wish we had more of the beginners on here, man. Because like a lot of the things that you guys are talking about, where you're running into problems and what to look for, it's here, right? Anyway, so back to CCL. Yeah. So to be honest with you, I'm kind of scolding myself because I said I should have seen this shit a while ago. I had actually looked at I had actually looked at CCL earlier this week, but the mistake I made was not looking at the weekly. I was focused on, like the daily, and I'm seeing that it's green. So I'm like, yeah, yeah, okay, not time yet. I really did have plans to come back to CCL for puts. I'm like, okay, this is running up right now, but I know I know it's gonna eventually need to come back. It traded into a fair value gap, so we'll see how it does there, right? Had I looked at, the weekly, I really would have just, been on that ass. But instead I chose to go to AL. Instead, I'm like, all right, CCL ain't giving me shit right now. Let me focus on AL. But I'm saying that to say, like, don't rush, right? Appreciate the process for what it is. Don't rush to try to find plays. Let the chart speak to you. Because yeah, had I let that happen, then I probably would have gotten in probably somewhere at 1571, like still grabbing the 14 puts. You know what I'm saying? Because obviously the target's all the way down here at 1398. But I'm sorry, 15 puts. My apologies. My apologies. But I would have gotten into 15 puts, but still would have targeted, you know, again, kept to my weekly targets of the 14, right? Probably would have ended up being a really great trade. I did, for the record, just to show discipline, took some profit at 48%. Still some runners left, but the majority of my position has been trimmed. Um, I gotta say that was kind of tough because I kind of have a feeling this shit's gonna take out both of these targets um, by next week, in my opinion. But we'll see. Anyway, coming into the daily, right? So now that I'm looking at that on the weekly, then even if I don't get these two candles here, right? When I see this inside candle on that Tuesday, before Nvidia earnings and everything on the following Wednesday, I'm probably looking, right, to take puts, right? I'm probably looking for that reversal to the downside. Or even if I miss that one, then I'm probably looking here at 1559. I got in somewhere around here in the gap fill, if I'm not mistaken. Yeah, I think it was like 15. I think it was like 1515 or 1516, somewhere around there, if I'm not mistaken. But yeah, I could have gotten a better entry up here with this 2-2 um, continuation to the downside, right? But this is how I'm framing the trade, looking at what's happening on the higher time frames. And yes, I get that the month is green, but it's inside. It's an inside candle, right? We both know inside candles don't always mean, like, I get that this is a bullish candle, but that doesn't mean like, hey, reversal next month. It could just still be a continuation to the downside, which is the reason why I try to I try to remind, with inside candles, please think of them as consolidation. No one for that time period is in control. No one. And it can go either way. So when you get inside candles, it's really important to to chart it to both sides, no matter how obvious the setup it is. All right. But as you can see, the month is very close to flipping red. Just got to get below 1463, and then the month flips red. Now you're in a trade with full time frame continuity going in your favor as well too. And as you can see, we are what, 15 cents away. What I say, 1463 to 1470? Yeah, 15 cents away, right? To take it down to 1463. All right. So yeah, we get the big candle. We're looking for the 2-2 continuation. And then you can even mark out this daily low if you want as a target, right? Because at this point, again, you're up. Runners are at 48%. Actually, probably a little more now that it's at 1478. But runners are good, and yeah, now you can just be stress free. You can let it do its thing. You've taken your money, you've secured your bag. Now just you can let it play. I can let this shit run into next week, Wednesday, Thursday, whatever. See what happens. You know what I mean? You're stress free, and you're not having to look for those big ass. Let the runners be the home runs, right? Let the runners be the home runs. All right. You don't have to, sacrifice the entire position if you will. All right. Okay. Other one that we're going to recap. Let's talk about Sal's AMD. All right. So Sal zoomed in on smaller time frames, but I'm going to start framing it from the daily. Okay. First thing that we notice on the daily is that, again, we have a high that's taken out, right? Clearly, there was resistance on Thursday, couldn't quite take out that high. We finally do at market open, right? Only for it to trade into a fair value gap and what? Fail, right? To the T. And this is why it's important, I would say, to mark those fair value gaps out. Look at that. Just kissed it, and that's all she wrote. All right. So as a matter of fact, what you could probably do if you get savvy enough, because I was looking at this on the 5 and the 15, right? What do you know? Breaker block on the 15. So price, soon as market open, price traded right into a breaker block. Same thing over here, created that high, exhaustion, right? Because we took out this high over here, you get exhaustion, and now we get that pullback. Even better with the corrective activity, trading right back into a previous breaker block, and yeah, that one failed too, right? So this was almost in a sense a perfect setup for puts, right? We gapped up, right? And we know with gaps, they have a tendency to get filled. We took out a high, so there's potential for exhaustion, traded right into a breaker block, but also a fair value gap on the daily as well too. So you got two confluences giving you some resistance here, right? Fails, comes right back down, and again, profitable trade, right? So could have gotten this again if you wanted to take strat entry, boom, right there at 169.54, only to end up at 160. And what was it that he targeted? I think it was the one. No, it was the 160s. So yeah, we're talking a $9 move. Well, actually, at its lowest, we're talking $11 move. That's a banger trade. That's a banger trade, right? And again, even if you look at it from the 5 minute, right? So again, we took out a high, made a higher high, but as you can see, we could not displace above that high. We exhausted. So you end up with a bullish shooter. Yes, it is bullish. However, when you add in the other confluences, the breaker block on the 15 minutes, the fair value gap on the daily, right? Higher time frame being stronger, trading into that coupled with the exhaustion, yeah, beautiful trade to take. And with it being on the 5 minute, you have a little bit more precision. So you get a scalpel entry up here as opposed to down there. And then that's all she wrote. But how was it seen? Starting with the higher time frames, right? You can see with the higher time frames that we traded into a fair value gap. So that's what I like to do. Whenever I see stuff like that, I like to zoom in. I'll mark out the fair value gap so that when I zoom in on the smaller time frame, we'll see what price is doing, reacting to that. Even on the 270, this is a power of three. There's your accumulation right there. The breaking of these highs, that's your manipulation. Manipulated right into that fair value gap, only for it to, again, exhaust, fail, reverse, and distribute back to the downside. Now, what will tomorrow bring? Who knows? I mean, it did fill this breaker block, so it could bounce off of that and continue moving, or it can continue heading down. Looking at it from the daily, we also traded back into a structure break and fair value gap as well too. And this one's one-sided, so it tends to be stronger. So who knows? Maybe we do get a bounce off of that tomorrow. Honestly, with the way VIX is looking, I'm not really too sure about that, but maybe we do. All right. That's AMD. If there's no questions about that, let's just run through what we can possibly expect for tomorrow. So Lotto Friday, um, like for me personally, like if this gap gets filled and I think we'll probably trade down. I'm thinking we head back down to we'll head back down lower, probably 520. We'll see what happens, right? But I think I think we're gonna get that 3-2 continuation to the downside. VIX went double outside, so you know, again, not a rule of the strat, but I've noticed that whenever you get that combination of double outside, and usually if they're in the same direction, it's probably going to explode in that direction. And if I'm not mistaken, both of VIX's, yeah, both of VIX's outside candles are both bullish, or both ended up bullish. So they both started out as two downs first, and they both reversed. So clearly the bulls on VIX do not want this shit going lower. So we might, I would say we might get a nice little explosion tomorrow, being Friday, maybe up to 14 possibly. We'll see. We'll see how that works out. But I do think that we'll see blood next week. Again, we set up a 3-2-2 rev strat. We traded into a breaker block, but still, we see that 3-2-2 rev strat. We took out the lows over here as well too. So I think we get that. Actually, we took out not only this low, but then we also took out these lows over here. So right, same concept as what we talked about with SPY, right? Taking out the highs, but you're seeing it inversely on the VIX. Let me get rid of this breaker block. So get rid of that. There you go. So now you're seeing the inverse of what happened with SPY on VIX, right? This time you have the broadening formation made on the low side. So now what you would probably do is look to see if you find a fair value gap for price to potentially trade back into. So it's also another reason why I choose 14, because on the weekly, if we get that 3-2-2 rev strat, we're probably going to trade back into this fair value gap. So I would say VIX probably would see 14, 15 by next week if this reversal continues, right? And yeah, there's clearly, as you can see, there's room for it to run. I'll probably say it'll probably find some resistance, probably around there, if it runs up that high. I'm assuming, if we bleed that much, right? But yeah, again, and that's one of the things I talked about, um, with, actually, let me switch back to like this. Right? See, so let's switch to, actually, because no, I don't really want to have to redo all that setup that I have. So, but yeah, you see the inverse, high pullback and then makes a higher high, right? Low pullback and then makes a lower low. But you see the exhaustion, they move inversely to each other, right? So, um, really important that you get that. Really important that you get that, because not always, but I mean, VIX is not the only thing that I use, but yeah, they're really good indicators of a potential reversal in the market, right? If you think about it, VIX took out some pretty major lows on some of the higher time frames. It took out the monthly low last week, if I'm not mistaken, and it took out the quarterly low this week, if I'm not mistaken, or vice versa. No. Yeah, the quarterly was this week, if I'm not mistaken. But yeah. So you like there has to, there's gonna be exhaustion risk at that point, right? As a matter of fact, no, not all-time lows. No, not quite. Yeah, not quite, not quite. But you had to have known at that point that there is, potential for exhaustion. And that's where this is what we mean when we say, like, you have to be careful at all-time lows and at all-time highs because there's potential for exhaustion. And I'm pretty sure, and again, this ain't talking shit, but I'm pretty sure a lot of people got burnt today. And I'm not just talking in the Discord. Oh, the Makia, the cat calls were before this shit that happened. My bias on cat is entirely different now. I'm not thinking calls anymore. It was looking for cat. I was looking for it to trade back into. Can you explain the reasoning? What's the monthly time frame? Gotcha. So it was originally supposed to trade back into, where was it? Turn everything back on. All right, so it bypassed this fair value gap. I thought it was going to just trade back into the fair value gap here because you see how the inside candle kind of just wicked off of it. So I thought it was going to trade back into it. Didn't. So once that happened, I was like, all right, nope, I'm good. I thought maybe there was going to be a little hope today because obviously this is a bearish 3. So it started out as a 2 up. So what I thought when I saw the inside, I thought we are going to get that 1-2-2 rev strap back to the upside, which is what made me thought the idea or the plan was take this trigger to the upside, right? When it goes 1-2-2 rev strat, and then target. This was my secondary target, 368.17. Give it time to get to that target. That was the original plan. But once I started, I got the alert that it triggered, but once I saw that VIX was acting the way that I was acting, plus futures had taken highs as well too, I just ultimately said, nah, I'm not gonna do it because I feel like we could pull back as a market. I know Cat's gonna get dragged into that shit, so let me just wait to see if maybe it trades down into this range, and then potentially reverse. But I kind of want to wait to see. It did sweep lows and it couldn't displace below the lows, so maybe this is setting up for possibly a 3-2-2 rev strat, right? It kind of came down to the let me draw it out. It kind of came down to the 50% of the fair value gap. So um maybe there's a chance for reversal here, but I'm gonna let Friday play out, right? My best scenario, if I want to go back long though, is I wanted to take out this low, and that'll be the manipulation candle, but it'll end up being like a hammer for a 3-2-2 rev strat back to the upside, potentially. But yeah, right now, that's not, going bullish is no longer the bias. I'm not bearish on it either. I just want price to decide on what it wants to do, right? Either we, take out the lows, we continue heading lower. What that'll do is create a bearish fair value gap. Then I'm looking if we're gonna break structure to the downside because we didn't. All we had was a change in state of delivery. That's it. But we haven't actually broken structure to the downside. We need a candle to displace below this. So if we get that, we'll be creating that fair value gap. And then I'm ultimately going to look for price to trade back into that fair value gap and then take puts to the downside, probably targeting this low. Does that help?
Yes, thank you.
Perfect. Thank you for asking questions. We love it. I can honestly speak for all the admins when I say that. But yeah, that's what it was with Cat. If you have any other, if you are like this is in place of Biker, even though he said he's gonna do it tomorrow, but if you have questions like what you were saving for Biker's Zoom, you can still ask. You know, nothing wrong with getting a different perspective. You can still ask Biker. I'm sure he'll give you his perspective as well too, and maybe we'll align with some slight differences, or maybe we'll be in complete alignment, or maybe we'll give different perspectives. Either way, it's still a good thing. So let me know. 9:27. So yeah, we're making good time. I plan to stop somewhere around like 10:15, so we're making some good time. In the
May I
meantime,
ask you about Tesla?
you want to ask about Tesla? All right, cool.
Yeah, I have I'm still holding. I have an expiration for 531. I have 173.74 as a level. I think that's from like it might have been a low from a month ago. I can't remember. But anyways, I just wanted to know with the 4-day weekend, um, I have in 185 strike. What is do I what do I should I cut? I'm looking at it and like I don't know what I'm charting if I'm just being completely transparent.
All right, let's do this. Are you using a particular strategy?
Strat,
Strat?
ICT. I kind of like mix them both in
Mix
vibes.
both? Okay, cool. In that case, I'll leave everything back on then. Okay. Let's get rid of everything else though, right? So I'm gonna just do it the way that I would do it, and we go from there. I'm not saying it's the right way, but just kind of my process, right? All right.
Mm-hmm.
So looking at what are we seeing on the weekly, right? We are seeing a 2-1-2 up, but we're also seeing a shooter, right? So right now on the weekly, this is what we're seeing. So this sets us up potentially for either a 2-2 continuation, or we are looking at a 1-2-2 rev strat back to the downside, right? And a couple of things that I look at and I'm paying attention to is the fact that price could not get above this high. Kind of made that double top, which is probably right around the same place that this candle opened as well too. So when I'm seeing that and I'm seeing that exhaustion around that around that range, that tells me there's resistance there. Not sure if this would be considered a rejection block. That's going to be my next thing that I have to start studying on ICT so I can like really learn where they show up. But either way, the point is, this is one of the things that ICT has pointed out in its lectures, where the body, pay attention to the body, and then you see like the subsequent candles after that. Excuse me, where the highs are, they're unable to take the open of this previous candle. That's the first thing that I'm seeing. I know we're coming from lows, and technically we have made a higher low, but we have also not made at least a strong enough fair value gap, right? This is a two-sided fair value gap. Actually, it's a weak. Actually, this is not even really a fair value gap. Yeah, because that's only a wick. I don't know why the indicator is indicating that. So we haven't created a fair value gap to the upside, right? So there's no internal range liquidity to trade back into if it starts heading back, if it starts heading back down, something for it to bounce off of. We haven't gotten that yet. So as of right now, the only fair value gap that's still legit to me is this one because it's being respected, right? All that happened is that you had a change in market structure to the downside. And then yes, you do get the reversal, right? But what all that happened is we traded back into a fair value gap. We couldn't displace back above it, right? So whenever price is coming back up, you got to pay attention to things like that with the ICT point. Ideally, what you would want is for price to get back above this fair value gap, come back and trade into it, and then bounce and head forward. Then that you could probably take that entry to the upside. Ideally, that's what you're looking for if you're trading using fair value gaps. All right, because remember, price is going to trade from internal range liquidity to external. So all that price did is traded right back after making that lower low. It traded right back into internal range liquidity. And so far, unless we get some sort of magnificent Friday, it's setting up to displace away from internal range liquidity and more than likely head back down to external range liquidity. Now, am I saying, actually, can't ignore that low down there as well too. Now, am I saying Tesla's going to drop all the way down to 138? No, I'm just saying, I'm just, kind of setting up the plan and how I formulate my bias, right? So from a strat perspective, we have a 1-2-2 rev strat potential, right? We have a shooter, right? So we have a potential to go 2-2 reversal and complete that rev strat from a strat perspective. Also from a strat perspective, we did make a higher high. Let me close all this out. We did make a higher high. So we have the top of our range. I think what happens is, and myself included, we get so focused on when price touches that low that we're thinking automatically it's going to start bouncing and like continue heading all the way back up, right? But that's where the ICT comes into play, and we look for those fair value gaps for price to trade back into and see if that's going to act as that resistance and, again, ultimately push price back down, right? So now that I'm done with the weekly, I'm going to go ahead and look at what's going on the daily. All right. Today, we got the 2-1-2 reversal to the downside, right? After touching highs, couldn't make a higher high, but we got close. Immediately rejected. This fair value gap is not respected at all. And now we get the reversal back to the downside. So for me, I know you said you're in the 185. Oh, damn, you got, yeah, whoa, shit, you hit it. When did you get into the 185s? If you don't mind me asking. Let me see the chat. GE, yeah, we could take a look at that. Well, if you want to answer later, that's fine. But yeah. I'm sorry. Maybe some mic issues, but yeah, just come back on when you can. But yeah, so looking at this,
yeah, 185 puts.
No
I think
calls.
calls. Yeah, she was in calls. So and again, this is me framing, and I'm not, again, does not try to point out did anything wrong, but I'm going to keep it a stack with you. Looking at what the weekly was doing, plus the fact that the full time frame continuity is bearish, and then I'm looking at, okay, the two up, fine. The inside candle, okay, fine. But then once price broke this line, broke this the low of this inside candle, honestly, I'm out of the trade at that point. No matter what the percentage is, I'm out. All right, because price and also the rest of the market was clearly turning bearish. If anything, your hopes of calls would be for price to come down and sweep this low and potentially get a reversal. But by the time it gets down to 171, you being at the 185 calls for next week, obviously the contract just would not be worth it at that point. The time decay low would
Yeah.
So
Thank
and
you.
again,
That's what I thought.
yeah,
I was literally holding. I can admit that I was holding out for hope, and I'm just like, all right. And just, I was hoping that because I bought time, something would happen, but I knew I should have cut it earlier today.
No, I feel you. I made that choice with McDonald's. I ultimately still think, I think I'm just wrong time-wise now. I think I probably should have, looked a little bit further out like September, but yeah, I had to make that choice. McDonald's hit the invalidation point. It sucks because I had really, big time conviction in it. I did. As so much so that
Lyric, on your charts, do you write like invalidation points or stop loss or anything like that?
No, I need to though.
it's okay. Well,
I'll add that.
it's fine, yeah, because the point of this for y'all is not for us to point out like you're doing bad. It's just to get essentially put a mirror up in front of your face. The sooner that you guys address and honestly address, I don't mean like putting yourself down.
Also, you know what though? So like a play something like that, or something that I'm gonna say, if it's not going your way, literally tag somebody in their beginner's chat. And I say the beginner's chat because that market talk get clogged up with all the talking going on or whatever. I'm not talking crap or nothing like that. I'm just saying it's easy to see somebody's question or something like that about a particular play. Like, hey, can you look at this ticker for me? Or, something like that. Something also I think, that, a lot of traders need to keep, be aware of is market sentiment. Like I know I tagged it like several times early in the day about market sentiment. It's not bullish no more, it's bearish. And I'm sure, a lot of people was looking at me like, huh? You crazy? But I was saying this for a specific reason. You know, we couldn't go higher, literally. And if you watch, I was on the phone with Food Guard earlier, and I was telling him why it changed about that broadening formation on NQ. If NQ gets hit by that broadening formation or anything like that, nothing in tech is gonna run, literally. Now you may have a ticker that's in tech or something like that, and it may run, but there's gonna be like a one out of 200 tickers that's gonna do like that. But pay attention to NQ and ES, which ticker you trading in, and which futures that is correlated with.
Yep. So and that's what we talked about earlier in the beginners chat with the futures, SPY and Q. Like, that's why I asked that question. How many of you guys actually like take that into consideration when you're looking at your trades? And a lot of you said that you didn't. And again, that's not to, say, hey, you're effing up. It's to say, like, all right, this is for you to realize you may understand setups, but your bag is not complete yet. This is a forever learning game, right? You got to add things to the bag. So SPYs, Qs, futures, VIX, right? VXX as well too. That moves invert. Hell, DXY, sometimes moves inversely to SPY as well too. SQQ, that is shorts for the Qs. So if
You
Q
know,
goes
you know something else, Sudo? Notice how I said, look at the speed of this candle now compared to early in the day.
institutional
And then,
sponsorship.
yeah, I was just about to say that too. That is like a huge telltale sign that I don't think a lot of traders, even talk about.
Right.
And when you start grinding towards a target, expect it to go the other way. But
Yeah.
wait for the reverse candle. When that shit, like, I'm gonna say sometimes you can notice that like on QQQ or SPY, whatever, if you trading it. And if going there like, and you got a strong bias with it, but for whatever reason, price won't draw to it. And that's basically like really that's telltale signs that, to get your tail out of that particular trade. Like when they start stacking like that, and you be like, ooh, it's gonna get it. That shit ain't never gonna get it. I promise.
Yeah. I in my head, it's not anybody else's terminology. I call it knocking at the door, but the shit gets slammed in your face. ES was trying to knock at the door a couple of different times, and then door open. Oh, I could walk through. Nope. That's all. And the same thing over here with the VIX, right? Same accumulation that you're seeing, just could not take out the lows. Like, really couldn't displace and not huge major candles with a lot of volume. So that tells you there's no institutional sponsorship. If you don't watch any other video of ICTs, that, in my opinion, is going to be probably one of the top most important concepts he teaches. If you don't watch anything else, watch that, right? Because then you'll see those candles and you'll know, okay, this one's driven by institutional sponsorship. In other words, the banks, the algos, they're dumping their money into this move, right? Strat teaches us the trend, right? So Tesla, we see the trend, so we know which way it's going. But when we get the big candles like this, now we're entering with the algos, the ones who are driving the market. You get what I'm saying? Like, that strengthens your trade. It's not just about, so Strat tells you about trading with the trend. ICT teaches you about which ones are actually driven within that trend, which are actually driven by the algos, right? Huge displacement candles, right? Look at SPY on the
You
on like
hold you had showed them that AMD trade at all?
yeah. We
Uh,
actually we did the futures already. We did AMD, I
uh
read through CCL. They asked me to look at Tesla right now. But yeah, I talked about all those concepts already. And what we see, the
tomorrow,
breaker block and everything.
yeah, tomorrow gonna be a toss up though.
Yes, I said that too because um, where is it? Is it there's a fair value gap somewhere that
Man,
it
look, that
traded
shit.
back into.
You got the fair value gaps underneath it, and it's a three. You know, you
Yeah,
already turned to a three, and plus you got them gaps. You heard me?
yep. And
But
then
notice how it did price didn't drive all the way down there, so that shit might switch or
yeah,
reverse or whatever. You know,
yeah, yep. So, and I agree with that. That's what I'm saying. Like, it could, we could. I said, who
you got
knows?
a
Because
man.
with
Look,
the
you got a whole bunch of outside candles too, all across the market.
yeah. So that's what I'm saying. Like the double, like so I got the double outside on the VIX on the daily. And anytime I've seen double outside on anything else, including like Netflix, crowd, y'all go back and chart it. You'll see what the fuck I'm talking about, especially Netflix, right? That was actually the trigger that took Netflix all the way to wherever the hell it ended over this past week. But yeah, I see that and that makes me think, all right, we're gonna push. We're gonna push and short, but then at the same time, we did get a three. We did take out lows. There are some fair value gaps as well too. So yeah, I mean we'll see. We'll see what happens. For anything can happen on Friday. But yeah, was it Lyric that was asking about Tesla? Do you see what I'm talking about though? Like looking at the higher time frames, that's telling me one, but then also looking at the daily, honestly, the only thing that would have kept me in the trade is if we would have went 2-1-2 up, then yeah, I'm in it. But once it gives me that hit right there, I'm out. So what you could do is if you want to keep watch on it, you can kind of see what it does, once if price gets down below these levels here, right? And then, you might get a reversal there because we're taking out a low and you might get a reversal back to the upside with Tesla. But for right now, yeah, for all intents and purposes, look like Tesla wants to head back to the downside. Let me check the chat real quick. What's that video? What are we talking about, Rico? What video? I'm sorry, I did a lot of talking, so you're gonna have to remind me. Oh, ICT, it's shit. It's in the 2016 mentorship. Start month one. It's one of the month one videos. It's really one of his beginner videos, like just introducing you to the mentorship. I'll try to find it and post a link for it, but it's one of this 2016. And honestly, ICT is an eye opener in general, but the that institutional sponsorship video really connected a lot of dots for me on the fair value gap. What are we talking about for Tesla? You talking about the fair value gaps down here? I mean, shit. If it wants to trade all the way down here, that's honestly, if Tesla comes back down to 150, I'm probably going fucking long in like probably a 3-month swing or something. Honestly, yeah, that's just me. Tesla ain't going nowhere, y'all.
Yeah, but hold up. I mean, I used to say that shit with Tesla, bro. But Tesla just got so much negative press on it,
It
in my
does.
opinion.
It does.
Um, and that EV game, that EV car game shit, man, ain't none of the tickers are positive on the year. They actually been losing money.
Yeah, it's
I
just
think not till 2025 or 26 is that EV game gonna come into play.
oh yeah, for sure. I'm just talking like I mean, I don't think Tesla will explode, but if it gets down to here, like there's a gap here as well too, especially if it starts resisting the gap, not to mention the fair value gaps, the multiple fair value gap. I mean, yeah, I can't ignore that. If I see exhaustion and a reversal, I could probably maybe get it back up to,
Man,
165.
every time Tesla get up to like 189, 190, she just
Mm-hmm.
disappoint. You know, or
Mm-hmm.
some bad type of press come out, or
Dog,
you know,
remember we
like
had
I
talked
seen
about
something.
that?
Yeah,
I think we talked about it like 2 months ago. As a matter of fact, yeah, because we were talking about the 200 call. I'm like, I don't know. Tesla cannot get above this fucking 189 level. It was like a fucking magnet to it and just could not get above it, yo. So maybe that's exactly what's happening. Yeah, you're right. Maybe that's exactly what's happening now. Just could not for the like, couldn't do it, bro. But yeah, that is Tesla. I would probably say, just looking at Tesla, obviously the market can do what it does, but yeah, to me, I think, Tesla puts is probably more in order than calls, in my
If
opinion.
Nvidia don't run tomorrow too, they only gonna run it overnight.
Yeah, see, and that's
But
dangerous.
like yeah, now and it's gonna cause a lot of FOMO or fear, buying and stuff. And they're gonna draw you in with their liquidity just like ICT say, and then knife your ass quick.
Yep. Again, remember what we talked about earlier. Again, above those highs are buy stops, right? And a lot of bulls get trapped in that bullshit, especially at all-time highs. A lot of bulls get trapped.
Well, you know why though? That's because they used to Nvidia just running wild on, something
Yeah,
like that. Personally, I don't think we gonna see it run wild again. You know, not no time soon. Now they're running wild in the nighttime session or overnight. But if it don't run wild tomorrow, it's not gonna do it. And that's just folks' instincts on what they think it'll do or their bias or whatever. And I ended up this, when it wasn't pushing up, I ended up getting out that junk and I scalped it for a little change, but nah,
yeah, with Nvidia, I
Man,
mean,
you know
I
what
think,
too though? Them breaker blocks and them rejection blocks on Nvidia, man, every time it get to a certain point, man, them joints just be rejecting like crazy, like doing market hours.
yeah, Nvidia is actually it's actually been keeping, if I'm not mistaken, to pretty on course with like its rejection blocks, order blocks, the breaker block, just bouncing off of those things like
Yeah.
the way it should. Um, what was I
Now
gonna
the
say?
way to get the price targets upside for it though, you got to use them field extensions and more or less like cycle whatever. Like them even and odd numbers.
Sorry, 1 second. This is work. Oh, that's okay. That's fine. That's not that big of a deal. It's like the littlest things that happen, and it's like the world just ends for them. All right. What was I gonna say? Oh, okay. So yeah, um, the reason why I would say like things like that are dangerous, um, and if this is your first time going through it, then lesson learned. But whenever you see like, I'm always kind of paranoid of run-ups pre-market, and I'm also paranoid of sell-offs in the free market as well too. As a matter of fact, Meta, if I'm not mistaken, what was it, last year or the year before, sold off all the way down to 110. The quickness in which that shit was bought up was crazy. And I'm pretty sure there were so many shorts that got fucking trapped along the way. That's the manipulation to trap that liquidity, right? They want to dump money into it. The algos want to dump money into it, but they also want that liquidity. They also want that manipulation as well too, because if they can get that manipulation of trapping those shorts and forcing them to cover, when they cover, it essentially adds to their buying pressure, right? So imagine if your buying pressure is at 70 and then you manipulate other people into doing the work for you as well too, carry your shit for longer and faster on top of that, right? So you always have to be wary of things like that. Yes, Nvidia had great guidance. Yes, Nvidia had, doing the 10-to-1 stock split. But what happened the next day with the market? You know what I'm saying? So anyway, some things to either I would say to look at, and this may not be immediate. Actually, not this one, FedEx. This one's not immediate, but I think this will be a good exercise in charting and watching. Um, what price action does. All right. So FedEx, we have FedEx on the weekly. It traded back into a breaker block. So just like it did before, so there's potential for it to bounce and continue higher. And that's, that's absolutely fine. It could probably target this range up here, or possibly this double, the double top highs over here at 268, right? No fair value gap. So we actually don't get one till, actually, yeah, that's a smaller one, but it could really run itself back up. Now zoom in on the daily. On the daily, same thing. We've broken structure to the downside, but we do have a fair value gap over here. So what I'm really looking for, since full time frame continuity is red, right? Month is red, week is red, daily is also red. What I'm looking for, since we might potentially bounce off the breaker block on the weekly, I'm looking for that bounce to happen here on the daily, but to trade back into this fair value gap and then ultimately keep going lower. If that is the case, then I'm more than likely going to target this low, or potentially a lower low than that at 244, or potentially 230s. 235, excuse me. No, that was 240, my bad. Sure. Yeah, 240s, right? So I would say the good exercise is to watch it, see if it trades back into this fair value gap. If you start getting shooters or exhaustion candles around this range, the 50% or full gap fill, or even just, kissing it and then coming back down, then you potentially have an opportunity to go short. Why? Because price traded back into an internal range liquidity, failed out of that, displaced below, and it's more than likely going to target external range liquidity. All right. And then on the 270, same thing. I'm looking for it to trade either into this breaker block, this bearish breaker block, and then reject and bounce, or trade into, again, the fair value gap. As you can see, it also has another structure break and fair value gap within inside of this daily fair value gap. So you see how I'm layering the confluences on top of each other, right? On the daily, we have a fair value gap. The weekly tells me that, yes, we potentially have a bounce coming back to the upside. But how far up do we go? Where do we trade back into? We're trading back into this fair value gap. If that fails, then yeah, then we can maybe target calls targeting this high, or possibly higher, depending on how long you're holding your contracts for. All right. And then again, I'm just layering confluences on top of each other. If anything, we might get an opportunity if it fails out of this breaker block here. It might fail, and then we can probably go for the 245s or 240, or possibly target. Yeah, no, I'm right. 245s, 240. Yeah, I'm right. So to keep in mind, this is the 270. If you're taking entries off of a higher time frame, then your target should also be on that same time frame. But again, see, same thing. Hell, we may even get even luckier with it trading back into this fair value gap here, right? Up in the 250s. All right. I hope that makes sense. You see how I'm layering them one on top of each other, right? Daily. Then I zoom in, from the weekly. Then I zoom in on the daily. Then I go to what would be the equivalent to the 4-hour for you. Then I go to the 65, which would be the hour for you. Right. And then I just zoom in, and get even more of a precision cut. So if price trades into this fair value gap, fails, then I can take the 249, maybe still go for the 240s, right? If it trades up higher, whatever, it is what it is. I can still, because all this is an area of a potential reversal. You have a structure break in fair value gap here, or BSG, right? You have a breaker block as well too, a bearish one. And then you also have another structure break in fair value gap, right? So a lot of potential resistance here, a lot. And on multiple time frames. there's resistance. And then again, if you want to get really surgical, like what Sal does with the 15 and the 5, you can get surgical that way too. Just draw out the other fair value gaps on the higher time frame so you can see. But yeah, I'll probably get super surgical around 250, right? Because you see a lot on a lot of the other time frames. That's where a lot of breaker blocks are, a lot of fair value gaps around that 250 area as well too. So, I would probably get real surgical if FedEx gets around there and you start seeing it starting to exhaust. Also, another thing is we have highs over here that if they get broken, now you have a potential for exhaustion to the downside. Let me see the chat real quick. Let's see, same pattern. All right, let's take a look. So in the beginner chat, we were talking about XLF, right? So let's switch over to that real quick. Oh, no. Sorry, y'all. I grew up, well, I have West Indian parents, so like songs like this are like embedded into my head. All right. So the reason why we're talking about XLF financial sector, right? Because one on the weekly we got a 2-2 reversal. However, we did trade back into a fair value gap. So this could continue to be respected, especially considering that we traded back into a previous high. So far, we're using that as support. Obviously, the week is not done yet, though. All right. It's obviously not done yet. Okay. All we've created thus far is an order block, right? Last high candle before we displaced, and we displaced down on this candle. So we have a bearish order block that has been created thus far. But I don't really have it marked out because I kind of have a tendency to pay attention more to fair value gaps. All right. But where are we coming from with XLF? I believe we are coming from, yeah, all-time highs. Yep. Yeah, just had to make sure, right? So what happens when we're at all-time highs? What do we say? We have potential exhaustion risk. Now, we did not get, a shooter or whatever, but what did we get? We got a 2-2 reversal. After making that higher high, we got that 2-2 reversal. So if we're going to continue expanding down, then logically speaking, we would at least take out this low down here at 4017, at least. We take that out, now we have a lower low, now we have the bottom side of the broadening form, or a new bottom of a broadening formation, okay? Zooming in onto the daily, right? What do we get? We got a Nirvana setup that followed by a 2 down, massive 2 down. This candle probably is from institutional sponsorship today, right? Algos definitely poured money in to shorting this. I really wish I would stop getting the work notifications right now. Right? So if we're going to keep trending down, we've already bypassed one fair value gap. Actually, 1, 2. So now, yeah. So now here's the next one on the daily, right? So if we continue heading down, we might head down into this range, basically the $40 range. All right. And then again, you can look at the 270. Well, so far we got we might bounce off of that temporarily. But either way, what we're looking for is if, because we have broken structure to the downside, even if it does start trading back up, we're looking for it to trade back up into a fair value gap. So, well, obviously one hasn't been created yet, but if we can get displacement here, we get this fair value gap, and then price might bounce off of this fair value gap to trade back into this one before ultimately heading lower. All right. So you said you were looking at, what was it that you said you were looking at? What were the BLK, PP? I'm not going to check all of them, but let's check PayPal. Oh, this is all old shit. Damn. Ah, okay. Yeah. So I can see it, right? I mean, obviously it's not at the highs, but you get a high and then you get a reversal from the highs, right? Because this high took out that one and also this higher high as well too. So boom, boom. Now we hit the top of the range. We get the reversal back to the downside. Um, and yeah, if this fair value gap doesn't hold, as you can see, there's a lot of room to the downside. A lot of room to the downside. Probably your next level of support is probably going to be where this order block is, or possibly this one, right? If it trades back into that. But I imagine if you're going to lose this fair value gap, you're probably going to lose that order block too, at least so the lows get swept, right? So on the weekly, 212 to the downside, full time frame continuity in your favor as well too, right? Daily just created a structure break in fair value gap. So again, you can look for the 2-2 continuation. Strat wise, you can try to take that. Or what you can do if if you got the patience for it, right? Wait for price to inevitably come down and then come back up to retest this fair value gap. And if it does and fails, then you can probably take your puts there and more than likely start targeting some of these lows over here. Or you could target this fair value gap on a higher time frame. Starts off at, so basically the 55 put. Oh shit, that would be a nice ass trade. Yeah, that'd be a nice ass trade. And then what, 270? Yeah, even better, right? You got a breaker block there, a bearish breaker block there on the 270 or 4 hour, if you will. So essentially with breaker blocks, what you're looking for them to do is just something like, so this is the breaker block at this original, boom, 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 hits that breaker block and then rejects, right? If you're looking to go short, it's that breaker block like so, right? Because the block got mitigated and broken once price traded, because essentially it starts off as a bullish order block, right? But then once it gets mitigated and broken through, now it's a breaker block. So now what you would look for in this scenario is for price to break through, come back, right? Come back in and trade. Yep, there we go. Yeah, come back and trade into that fair value, into that breaker block, fail, and then continue heading south. Does that make sense? I hope it does. And I hope this helps. Or
Yeah, that was me, Tensho. Yeah, that makes sense.
perfect. All right. So, and again, with the swing traders, it's a lot of patience. I get that it's not for everybody. I do. It's hard to ignore the fast money. It is. I'm not knocking. I don't mean that in a negative way too, because full truth be told, Sal knows I scalped Qs today and got the 84% off of it. That was fast money. So I can understand the appeal to it. But you have to think of swing trading as more as, again, hunting. When you go hunting, shotgun, bow, whatever, rifle, whatever, in hand, you can't just run out into the woods and like start shooting the fucking place up and expecting immediately for your prey to come into the open and say, look, hey, it's me you've been looking for, shoot me now. No, you gotta wait. And even when you wait, sometimes it don't come. But even then when it comes, you line up your shot and you still miss. Or some other shit still doesn't go your way. Right? Shit has a tendency to go wrong even when everything is completely right. And I really want to stress that I'm not going to say people were complaining about Phil's plays. But you should also, and I get there's confusion about the challenge rules or whatnot, but you have to understand the market is essentially, you have to treat it like a living, breathing thing, right? I'll put it to you like this. You can start your morning off great. You know what I'm saying? You did your stretch, you have your meditation, everything's good. But just because you start the morning off great does not mean that's how the night's going to end. Everything changes. So you have to adapt and flip to that, right? So when you see the majority of the market and the majority of the group, saying, I don't know, I think we about to dump. And it's more than, it was a good amount of people saying, they seen a dump. And we're talking people that use all different types of trading strategies, and all of their trading strategies were telling them one thing: we about to dump, right? You should at least be curious about that. You know what I'm saying? We're not just getting together and behind closed doors and say, hey, let's just say this. No. We have different traders using different strategies, all seeing the same thing. That should perk your curiosity, especially if they're calling out the direction that is not the direction of the trade that you're in. That should really, really, really set off some curiosity triggers there for you to at least open up and say, hey, I'm in this right now. What do y'all think? You know what I'm saying? All right. So anyway, I don't want to come across like I'm like lashing out or whatever. Yeah. Oh shit, I forgot about your GE now, Nelson. Hold on one second. Let's go to GE real quick. And this will be the last one for the night. All right. I don't want to take away from Biker's Zoom session tomorrow. So any questions I didn't get to tonight, yeah. Like, and that's not on some like, oh, y'all should have known. Like, yeah, it wasn't just Sal saying it. I think I said it way too chill. I think Big Bama had saw that as well too. Evie even said like, "No, we about to dump." Like, there was a lot of people that were looking like, "Nah, bro, I think we about to dump for real, for real." So that should at least spark your curiosity. So if you're not going to ask questions out loud, go to the futures, bro. The futures are not some big bad thing that you can't understand their charts. They trade price too, right? So go to the futures. Now that you know about the VIX, now that you know about VXX, now that you know about SQQ, now that you know about DXY, and as a matter of fact, whoever was in gold and silver and been talking about it for the past couple of weeks, that also should have been an indicator to you, right? Whenever you see like, the commodities, the precious metals, or money starting to get dumped into them, yeah, bro, that's a protection move. That's a defensive move in anticipation of a potential sell-off in the market. That's what that move is, right? So when you see that, those are some signs to pay attention. Another thing, usually energy starts running when the market's selling off, usually. So if you see XLE gearing up as well too, then yeah, that's probably a sign that you should at the very least be checking like, yo, is SPY about to dump? Q's about to dump? What's going on? All right. Let's take a quick look at GE. I'm not sure what time frame you're looking on, but we can take a look at it. Well, damn, GE was impervious. Holy shit. Ow. Like, GE is on this bullshit, I see. I forget when, but GE had an amazing run up. I think it was at some point last year. That bitch did not die at all. And I see, yeah, it's still fucking doing it. This is from October. Yo, son. From 88 all the way up to 170 of a high. Holy shit. Why ain't nobody tell me about GE? Why didn't I
Yeah,
tell?
see, that's why I asked about it, because when the market was dumping GE, didn't get
God
affected at all. It just
damn.
stayed strong. So that's why I asked about it. Like, does it move like how oil move, or what is the reason
No,
why it didn't?
GE is industrials. It's in the industrial sector, not in oil.
Okay.
And I believe what it is they did some really amazing repositioning of their assets. I think they sold off some of the dead parts of their business as well too. I think they sold off some of their aviation business, the making of the airplane parts and shit. I think they sold some of that off. The reverse stock split as well too. I mean, yeah, it looked bad when they were doing all this shit, but as you can see, it played out perfectly. God damn. So with on the weekly, you have breaker block theory, and so far it's being respected. So, but again, you are, I believe, this is all time highs. No, it's not. Oh shit! So you still got room. Okay, good. That's even better. I'm glad that it's not all-time highs because then I was gonna say that's gonna be fucking scary. You're just gonna have to look backwards to start setting your previous targets. That's good though. That's a lot of room. Okay, good. Yeah, essentially you have breaker block theory on the monthly, a bullish breaker block. So, um, price broke this bearish order block, turning it, right there, turning it into a bullish breaker block. So essentially what you're looking for again is this would have been, the start point coming up, it would have broke above, coming back down, back to the order block, that previous order block range, using that as a breaker block. And then now we're looking for that bounce. So essentially that's what we could be seeing here with this three. So yeah, you probably want to look at the targets, but yeah, with the weekly being outside, you can probably get that 3-2 going. Looking on the daily, yeah. Um, And then yeah, we got the 2-2 continuation. We got a high taken out. So honestly, I don't know if you're in it, but ideally I would probably want to see price trade back into this previous high and maybe use that as support and then bounce off of that. You can probably even target up here at the 170s or higher. It does have an ATR of about $4, but that's you can probably go, I would probably say if you're gonna swing it, probably look at the 170, 175 for next week, or possibly either the 180s for June. Actually, no, 175s for June. Keep it tight because you never know with this crazy ass market. But yeah, and then you gotta shit. Then you gotta hammer on the on the 270 or the 4 hour, if you will, because it did come back to retest its previous high, ended up just being hammered. So we're looking for it to, yeah, this is a good setup. This is a really good setup. I want to see how Friday does for the market overall, but yeah, this is a good setup. I would take calls on this. Yeah, and then you get the 2-2 reversal. So clearly GE wants to keep going. You got full time frame continuity in your favor. We haven't, hit the top of a broadening formation on the daily, so there's still room for it to for price to run as well too. Yeah, no, I like it. I like this setup. Really good setup. Really good eye. GE was posted in the chat today. I'm not sure who posted it, but that's cool. Whichever, I don't know if you mean an admin or whoever posted it, kudos to you. Yes, that's what, yeah, they essentially split themselves into like 3 different companies. But, while doing that, they kind of killed off a lot of the dead weight because they definitely had a lot of fucking dead weight that was weighing them down. So, but yeah, no, I'm really happy for G. This is nice. This is nice. Yeah, I like it. You could probably go 170s for next week or give it 2 weeks of time, but I like it. Especially again, if it trades back into tomorrow, yeah, if it, tries and attempts this 163, 164 level again and bounces and continues higher, then yeah, I like it. I like it a lot. Excuse me. Um, anyway, that's all I got for you. This was meant to be a lot quicker, but I'm glad we got some questions in. I will post the conversion as soon as it's done. It'll be in, what is it called? Tensho's weekly Zoom sessions in that channel. So, you know, if anybody who missed it, if they want to see it, and if you feel it was informative and they could gain something from this, then, you know, direct them to go watch that video and really direct them to get the ass in here next time. But yeah, direct them to go watch that video. All right, y'all. Love, peace, and chicken grease. See y'all on the flip side.